Good afternoon, everyone, and welcome to our September webinar. Our topic this month is how to boost profits using early buy and sell strategies. Our speakers today are Mr. Mike Webster. He's an SVP and a portfolio manager for O'Neill Capital Management. Welcome, Mike.
Hey, thanks for having me.
And Arusha Pierce, a product coach for MarketSmith.
Hey, Jonathan.
A perennial favorite. So our agenda today, we're going to talk about the market. Mike's going to give us some insights on what's going on with the current market. We'll move on to early buying strategies using alternative pivots. Then we're going to give you a sneak peek into some new research from Mike on how to get out early, an early selling strategy called the Pivot Day Low. Very interesting stuff. And finally, we're going to end with some current examples. We often talk a lot about theory, but what we're going to show you are 4 examples in the last day or so which have broken or are about to break alternative pivots. So we're going to give you some live examples at the end of the webinar to show you how this stuff actually works. And of course, we'll end with Q&A. So let's start with some market overview. Mike, walk us through the market.
Sure. Well, we know that understanding where you are in the market is the most important part of trading. If you don't have that down, you're going to be making mistakes all over the place. So you need to be in phase with the market. So we are in an extremely strong, resilient bull market right now. And let's just go over a little bit of a history, brief history of where we are. So we're looking at a monthly chart, and you can see on there the numbers on the bottom, and those are the bear markets that we've been through. You can see we had a huge run-up in the late 90s, and then you had the blow-off top and the bubble burst in 2000, and we had that devastating 78% bear market from 2000 to 2002. And let me tell you from firsthand experience, that was not a lot of fun to trade through. And luckily, I got to spend a lot of time with Bill, and we did lots of projects during that time because there wasn't a lot of trading we could do. So then we had that nice bull market from 2003 through 2007. There was a lot of money made here at the firm, and I'm sure a lot of people that are listening to trade during that time made a lot of profits. And then we had the crash from 07 to 09. Now, that was truly a crash, it was a global situation, and I think it hurt a lot of people more than the 2000-2002 bear market, because what happened is it killed all the housing as well. So everyone felt it not only in their 401ks and their trading accounts, but they felt it with their house, and that had the same psychological impact as the bubble bursting. So here, just looking at this monthly chart, we've had 2 of the worst bear markets of all time, and we're looking at them, and some of us have lived through them. And that does help, because what it does is it cleans house, and all the companies now are really lean and mean, and they got rid of anything that was dead weight, and that's why we've lifted off here. And you can see that in 2011, we went through a normal bear market. That's what they look like, is a little bit over 20%. That's the norm, 20%, 20.4%. On the NASDAQ. We prefer to look at the NASDAQ. Some people like the S&P or the Dow, but we prefer the NASDAQ here. And then this is the debatable thing. Many times you'll hear people say, you know what, we're so long in the tooth. We've been in a bull market since the bottom of 2009. This has got to end soon. I have a different take on it. I say that we really started a new bull market here in 2006. And let's go ahead and look at the weekly chart. We can. And you can see on this, it didn't quite get your 20%. We got 19.5. So if you round, we got the 20%. If you look at some of the other indices, like the Russell 2000, I think that was off 27%. Lots of other ones were off more than 20%. And Arusha, you were trading during that time frame. That felt like a bear market, didn't it?
Yeah, absolutely, Mike. I remember running into you during that time, and you mentioning, saying, hey, do you feel like we're in a bear market at this point? Because while the indexes were kind of all hanging in there. They were getting hit, but the stocks that we were looking at or we were in, they were getting destroyed. They were like 50% off their highs and stuff like that. And so it was kind of good to hear it from you, because it was one of the weirdest kind of environments that I've seen, where we weren't seeing it necessarily in the larger indexes, but in all the stocks that we were interested in, they were just getting decimated.
Absolutely. And so that's really the feel of a bear market, when nothing's working, and that's what we lived through. So now this is fresh. This is a fresh bull market. We're just a year and a half into it, and this is the strongest environment that I've seen. Let's go to the daily on here. I'll walk you through. So we had a couple things on here that were really surprising. Now, the Brexit over in the bottom left. When we went into that vote, everyone was expecting a certain outcome. Then it was the reverse, right? There was talk about it because of the weather and the turnout, but whatever the reason, with the market hated it. They thought it was going to be the end of Europe, and then that was going to spill over to us. But it brushed it off in 2 days, and then it would bounce real fast. And then at that moment, things felt so strong. Our stocks, canceling stocks, IBD stocks, were really working well. And then, so you're making progress, and then we get close to the election, and there's all this news, and we're still going through that. Someone's writing a book about, 50 reasons why she didn't win. But there's two sides to everything, and you never want to take a political bet when you look at the market. You just want to look at what is the market doing, whether you are a Republican or you're a Democrat. You're on the Trump train from day one, or you're a never Trumper. It doesn't matter. You're looking at what the market's doing. And so what happened when the election happened? Remember the futures? How were you watching what the futures
the futures just blew up.
Yeah.
After, yeah.
Because everyone was talking, if Trump gets in there, that's it. He doesn't know what he's doing. He's a crazy man, and this market is going to roll over.
Yep.
But the market knows better. It's whether you're pro-Trump or against Trump, doesn't matter. The market knows. And so the market was able to figure out, for whatever reason, maybe it's a tax plan, maybe it's something else that we don't even know about, that we were just in a very strong market.
And to add one thing there, I think this emphasizes flexibility.
Yeah.
Right? You have to be able to kind of adjust with that environment and just not have a single point of view.
Absolutely.
What does Bill say? Bend with the wind?
Bend like a tree in the wind.
Bend like a tree in the wind.
Yeah, he told me that once. That's a whole different story. And we have an hour. So let's blow up this recent correction we went through. So this is a 4.4% correction. It felt worse than that with certain stocks, but it started off there at the end of July when the Senate couldn't do what they've been saying they were going to do for 7 years. Repeal, replace, and get in there. We win everything, and they can't do anything. Right. So the market didn't like that, because then it was like, oh, if they can't do this, and how are they going to do anything else? So market doesn't like uncertainty. But it was able to work itself out. But we had a lot of other news coming through with that. We've had hurricanes. We've had, what happened in Charlottesville. But even scarier, we had what's going on in North Korea. And that's what you're always looking for, that key news item. And there was a huge tell in the marketplace. Now just, think through. We had Trump going out there saying the fire and fury comment, and the market did not like it. Everyone was scared because you have this crazy guy over in North Korea, Rocket Man, and we don't know what he's going to do. And then you've got Trump, and most people don't, really trust him either. So now we could have a huge war, and that's really, really scary. And then what does he do? He shoots a rocket right over Japan. And I remember it was after the close, and all of a sudden I see my computer just flashing all this after hours trading, and I'm going, what is going on? So I turn on the TV, and they say, the missile is over Japan, and everyone's like going underneath their desk like it was when we were growing up, and I'm like, oh my God, this is it. The market had 9 days of distribution. It was sitting right at the 50-day. It was like, this is it. And I was in the market. I'm like, oh my God, tomorrow's going to be horrible. Now let's take a look at the intraday. So here's an intraday. Normally in these things we don't look at intraday charts, but this is an hourly chart, and you can see there was this gap down in the morning because there was the reaction, and I thought everything was going to fall apart. I was just waiting to see how. I didn't do any trading, and then everything just lifted right away. It was like 5 minutes of selling, and then boom, straight up. Now let's go back to the daily. And you can see there was a follow-on each day after that. The volume was increasing. And this is August. There was never a volume in August. I looked back at all the follow-through days and all the history of the NASDAQ, and, on a follow-through day, something key where you normally see a lot of volume. In August, there's never volume. In fact, there was only volume, above average volume in 1982 and 1984. So you don't expect seeing volume, but you've got volume increasing each day, and the market's going up. So lots of people were waiting for this above average volume to happen, but it's August, people on vacation. You just don't have the professionals in there. But that was your tell. when that missile went over Japan, scaring everyone in the world, saying, okay, now we're going to go to World War III, it didn't happen. The market was able to digest that. Maybe they looked at it and said, okay, now it's not Trump and Rocket Man, it's Trump, and now Japan is on our side. We've got South Korea on our side. Now more players. Doesn't matter the market, if that's the interpretation, but the market was able to brush it off. So this is a super strong, powerful market today. But you take it one day at a time. We don't make predictions about what we think the market's going to do at the end of the year. We just look at what is the market doing right now. Right now, the market is as strong as I've seen it at least since 2007, and you need to trade it accordingly, but you need to follow it every day, read the big picture. The IBD writers do a great job keeping you in line with the market, and that's critical to read that every single day.
All right, now we know the health of the market. Let's talk about how to sneak in early using alternative pivots. Mike, walk us through some of the advantages of using alternative pivots.
Sure. Well, an alternative pivot is an advanced strategy, and it's for someone who wants to get an edge. There's a standard pivot that I'm sure everyone listening knows about, and that's when it's going over a line of resistance that pretty much everyone is going to see. But there's a little bit earlier areas of resistance, and there are a couple different alternative pivots that are out there, and we're going to go through two of them here. And so what advantage it gives you is it gets you in at a lower cost basis, right? That allows you to sit through some shakeouts along the way, allows you to pyramid into a position, and it also ultimately gives you a larger gain or a smaller loss in the end because you have a lower cost basis. And now the first one we're going to talk about is the downtrend, and that's typically found within a handle of a cup and handle base or a saucer with handle. You can also use them with flat bases, but typically it's within the cup and handle family. And so what you're doing is you're just finding areas of resistance within a downtrend. The more areas, the better. And it really is kind of an art, not a science, and sometimes you're going to be using the ultimate high, sometimes you're going to be using the close, or just an area where it's traded a lot. And once it penetrates through that area of resistance, that's where you're starting your buy. Now remember, with IBD and following Bill's system, you don't do a huge purchase at first. You buy 50% of whatever you're going to buy. So let's say you're going to buy 1,000 shares. Start off, goes through your buy point, buy 500 shares. Goes up a couple percent, you buy another 300 shares. Goes up some more, buy the last 200. So we call it a 50, 30, 20. So 50%, 30%, 20%, always averaging up. So this gives you that edge. So you can buy it first at the alternative. As it goes through your standard pivot, you're doing the rest of your buys. Now, the key with this is not as obvious. Now, everyone's not seeing it. It's not at fresh new highs. So you're not always going to get the volume that you would really want to see with a normal breakout. And keep in mind that the slope can't be too steep. And you should really study this quite a bit before you put it into practice because there is an art to it. But let's go through some examples.
Okay, here's Home Depot, Mike. So yeah, why don't you walk through this one?
All right, this is a classic one from 1991. All the rest of our examples, with the exception of one, are going to be brand new current examples. But this is one of my favorites, so I wanted to bring it along. And this is the beginning of a massive move in Home Depot. And you can clearly see as you start with a handle there at 41 and you draw a line and you just match along the peaks there in that handle, as it goes through there, that's where you're buying that. You don't have to wait for it to cross 41 for your initial purchase. So you can see that's a huge head start. You're in there, you're buying it, and you're expecting that stock to move higher. If it were to back away, then you have to start exiting that position. But you're expecting this. You're anticipating a true breakout, and so this is your alternative pivot, and that's the way Bill taught me how to trade, and I've seen a million of his marked up charts, and this is the way we really do it in-house. So you're buying it there as it goes through that downtrend, right? You buy your 50% of your position. As it moves up 2%, you buy another 30%, and then as it goes through that 41, then you're following it up. So now you've got your full position at a really low cost basis. That's going to give you that edge, and you're not going to be shaken out as easily, right? And that's the key thing. You don't want to be shaken out. We're all shaken out. Barushi, do you ever get shaken out?
Unfortunately, that's one of my specialties, Mike.
Jonathan?
Absolutely.
All right, so we're all getting shaken up. So we're trying to avoid that, so let's move forward.
Okay, 10-cent holdings. Now, here is a current example in February of this year, and you can see a cup with handle forming. Now, pattern recognition is picking up a cup with handle here, and you can see it's a stage 2, and the pivot is 2694. Okay, so that's your standard pivot, and so we're going to walk through and you're going to get familiar with these terms that we're talking about, but the normal kind of breakout, we're looking for 2694 as your standard pivot.
Some people may not be familiar with these charts. These are all Marcus Smith charts, and tell me a little bit about this pattern recognition. Is it available on all charts?
Yeah, so with pattern recognition, it's all computer generated. Mike was heavily involved with developing this for over 10 years, Mike? You were working on this project here.
A weekend.
A lot of weekends too.
My kids.
But it's pretty incredible because the algorithm is going to instantly analyze a stock on a daily or weekly basis and just draw these patterns. And so you're going to be able to analyze like an expert right here. And so you can just see it. We just hover our mouse over it. Stage 2, pivot, that's the buy area, 2694, and it's going to give all this extra data too. Now here's the downtrend line, okay? This is what Mike is talking about with the alternative pivot, and so we're going to blow it up here. And so notice we're connecting the peaks of that handle just to get a little bit earlier into it. Remember, we get a little bit of an edge. Our average cost is a little bit lower, and in the end, that can make all the difference.
Yeah, so when you get a chance, go back and study these slides and maybe watch this again because at first glance, you might think to draw the line similar to what we did with the Home Depot, which would mean that we would take it from the absolute peak of the handle on down, and that would be too steep, honestly. So you can see that we're starting our line with the day after the peak in the handle. And so really it's a visual thing. It's something where you're looking and you're seeing, okay, where is the resistance area? Because that's what you're wanting. An alternative pivot is just a line of resistance that it's passing. So as it's going through there, that's where you're buying it. So draw these on a lot of charts and look over the past year and get an edge that way.
Yeah, and to add something else, Mike has taught us all of this, me and the rest of the Marcus Smith coaches, these kind of entry points. And just as kind of a personal experience, really over the summer when we had all of this volatility and all this bad news, over the last couple of weeks, we've seen a number of these kind of alternative entry points. And it's helped me personally just get that average cost in there. So, and also some of our coaches out there.
Well, they all know about this, right? They can
call
and talk to them about it.
Exactly, yeah. So that's one of the nice things. We're all using the strategy in-house. We've been using it for a while now, so you can actually give them a call and learn from their experience.
Let's watch how this breaks out. So you can see it penetrated through that downtrend, and that's where you're buying it. Now, with this particular example, you happen to get volume in there, but remember, as you're not always going to get that volume, and the standard around here is that you like to see volume 50% more than the average volume, but with this, you're not always going to get that. And let's see what happens the next day. So you can see that you get a nice gap up, so you already have your low-cost basis stock. You're following it up, and notice that little blue zone that we have there. That's a key, what we call a key price range. It's just a term to mean that's the area you want to buy the stock. You don't want to buy a stock too far extended from the pivot. So we shade that little blue area from the pivot up to 5%, so then you can know right away that, hey, look, this is the area where I want to buy it. And then if you look at the bottom there, from 5 to 8% from the pivot, we shade that pink. Because down there, not a good thing. You don't want pink, you want blue, right?
And that's where we'll be cutting our losses if this doesn't work.
Yeah, but we're going to talk about that at the end, right?
Yep. And so you can see here on the weekly chart, 10 cents has had a great year, right? It's up 64% in 34 weeks, and that earlier entry point just allowed you to get in with a little bit lower average cost, hold a little bit longer, and a number of people will still be in it at that point too.
That's a monster.
Yeah. Ferrari, a new issue. And so this is back in September 2016, building this big cup with handle. And so you can see your alternative pivot right there. Nice downtrend line. Now here, this is where you can draw a trend line. You can actually set alerts using marks with the trend line to get that alert when it breaks that. But you're getting that alternative pivot, and around $49, you're ahead of that $50.09 normal standard pivot.
You can see, again, it has a nice gap up there, so having that lower cost basis makes it really easy to do those follow-up buys. And sometimes if you get a big gap up, you almost have to do that the 30 and the 20% right away. So a very nice, solid breakout. You could see, several months later how far it's gone, and you can see the green area there, that key price range, the green shaded area. That's 20 to 25% from the pivot. So lots of times you just want to book your profits at 20 to 25%, unless it's something unique or a recent new issue or it's Ferrari.
Yes,
who doesn't like a Ferrari, right?
Right, exactly. A huge brand name.
My favorite part of this example is you can see, because we got in early with our alternative pivot, we never came back into that range. If you bought at the standard pivot, it came back in and tested, made you nervous. Because we got in early, we had that extra cushion, and therefore we had a lot more confidence in the stock, a lot more conviction.
Yeah, exactly, Jonathan. And there you've got the weekly chart, and you can see it gave you all those great areas to add along the way as it was bouncing along the 50 days. So that was a great pyramiding stock. All right, so now prior resistance. We just went through the downtrend. This is in the same family. It's all the same advantages of getting in early. And this is just you're looking for an area of resistance. Many times this is going to be a flat base. Sometimes it's going to be within a handle. And so you're just looking for that ceiling. We like to think of a resistance as a ceiling and support as a floor. So stock runs up, kind of hits the ceiling, hits some sort of level, can't get through. It just needs some time, so it backs away and it comes down. You don't buy it anticipating it going through that resistance. You want to make sure that it proves itself. It can go through that ceiling and make that ceiling now a floor. And so you don't have to wait for the all-time high, or you don't have to wait for the standard pivot. You're getting in early. And let's go ahead and take a look at a classic case. This is Chrysler back in 1962. I love this. Could talk about it for 2 hours, but I don't think I'm allowed to. Bill bought this. He bought 5,000 shares. He bought it along with Gerald Loeb. For any of you people who remember E.F. Hutton, that was him, and great investor. And they were both buying it at that prior resistance. I remember him telling me there were 15,000 shares offered. He took 5,000 shares. Years later, he found out that Loeb took another 5,000 shares, and we know who took the other one. So, they were all buying it using this prior resistance. So what were they seeing? There's this giant cup with handle, and there was a Cuban Missile Crisis going on during that time frame, and so the stock, couldn't move higher, so it was forming this kind of double bottom handle, and it went up to that 58.88 and just backed away. That became the ceiling. They needed to get through that, so he wanted to wait and let it prove itself. So once it got up there and it was going through that 58.88, he just took those shares and then he added to it as it went through 60. So, I like having the Cuban Missile Crisis on there as a reminder. There's so much history in the market and nothing ever changes. And when a crisis ends, whatever it is, whether it's who's the next Fed chief, a hurricane ends, or what have you, always look for those stocks that run up the fastest, the quickest. That's on everyone's shopping list, and that's what the case was with Chrysler. It was a huge move. So let's look at some current examples.
Fox Factory, and this is April 2017. And so the pattern recognition is picking up a flat base here, and you can see here the pivot, normal buy area, the normal standard pivot, 30.15. But this is where we use the prior resistance. Okay, we're drawing a trend line there. You can set an alert on that trend line. And so you can see that resistance there, just like Mike talked about the ceiling.
Yeah, so, sometimes it works out with the way we have what we call marked highs, which is where you see a label of a high point on there. And so, go back to the blow up real quick, Jonathan. So that 28.95 that the computer already prints for you, that happens to be your area of resistance. So you're looking for it to penetrate that. So it doesn't mean if there's a number there that you use it, but typically it is. And so it makes life a little bit easier. So you're just waiting for it to go through that. Let's see what ends up happening.
So it merges there, and there's your alternative pivot. So this is your first purchase, your 50% of the position you're going for right here at this time. And then there's your standard pivot. Now, another thing here, if you look right below, there's a blue dot being highlighted. What this means is that the stock is breaking out, and it's also become more of a leader in the market, okay? The relative strength line is hitting a new high. So we use that line as a confirmation tool to tell us if the stock that's breaking out is actually a leader in the market.
Yeah, something that Bill would drill into our heads, all the PMs, is that RS line is going into new high ground, especially if it leads. If it's in the new high ground, that little blue dot is on there before the stock is at new high ground, you better pay attention to that stock. That is, by definition, it's a leading stock. Doesn't mean it's going to work out, but you're trying to put the odds in your favor. That's an edge. We decided, you know what, let's just highlight it. Make it easy for us.
Yeah,
right?
we would always forget about it, and let's let the computer do it.
Yep.
And so you can see it merged out, went on a pretty nice run, and look at this, forming another flat base. You're setting your resistance, you're drawing your trend line again, and this is a nice character of the stock right here, right? It formed another flat base, doing the exact same thing. As you're drawing your resistance, it's emerging out of that.
Well, let's just stop at this for a second. You know, study where we drew that line, because, you know, you would think that you would just draw it right at the peaks there of those pink bars, but actually what you're doing is you're trying to find that level where it's truly the resistance area. So notice how there are a few days where it closed right at that level. That seems to be the area where, you know, it's having trouble getting past. So that's the ceiling. And so it's not always that ultimate peak price. It's really getting through, you know, where is that area where it gets to that price, people sell into it. Yep. That's resistance, and we're trying to get through that. So those are, you know, just slightly earlier than if you use the ultimate highs, but we are trying to get an edge. That gives you an edge.
And so it merges out of there, so you're getting in before that $34 price point, your 50% position here, and then you're completing your position at the standard pivot.
That's a nice move. And
you're right at the green area. So from that last flat base, you're up 22% at that point. Take two software, and so another flat base is forming, and you can kind of see a smaller little resistance area here.
So what's nice about this is you can see, you know, this resistance area, and the stock is sitting right on its 50-day moving average, which is a whole different topic, but it gives it, you know, a really tight floor. So you'll know right away if the stock doesn't work out, you know, that you should be backing away. So you've got this little resistance from a few days ago, about a week ago. Then you also, the little 59.73, as it goes through that, you can be adding. As it goes through the 59.96, all those levels where it was little different ceilings on there. So you can add at each one of those until you get your full position. You'll probably have your full position right as it's passing the standard pivot of the 60-20.
Yep. And so there's your alternative pivot, and then your standard pivot. And notice the blue line again appearing. And Take Two, these guys make the Grand Theft Auto game, and so obviously a very, very popular video game out there. Should we go a little bit further?
As long as they don't steal my car.
That's true. I mean, take a look at where it caught this, right? The market, this is back when the market was working really well, and Take Two breaking out the normal kind of flat base, and look how much higher it is at this point. You know, it comes back in, finds support off the 50, forms another cup, and then it's taking off again. So sometimes, you know, you assume that you might have missed out on a stock, but you know, you always want to keep the very best ones on your watch list. Camping World Holdings, IPO based now. Okay, so we all know that IPO bases, they're early, they're these initial bases, but what's the biggest thing? They're volatile, right? So this is where it can really help out. You can see the pattern recognition highlighting IPO base. That normal pivot is 24.35. Okay, so we're pretty far away from that point, but now take a look at the resistance area here, 23.03. Okay, so you want to talk about getting an edge. Years a really nice.
In this particular case, normally with IPO bases, you're just going to be buying at the standard pivot because, as you mentioned, it does come along with extra risks as well as extra rewards. But with something like this where it's that different between your resistance and your standard pivot, you want to get that little extra. So you want, because when these things start moving, they typically move pretty fast. So the more of an edge you have, the better. And so let's see what happens. Wow, it happens all on the same day. So you're building your position throughout the day. Now, we don't have the intraday chart to see how it really played out during that day, but imagine as it's going through that level, your resistance area, you're buying it. It's super powerful. It's moving, and it hits that standard pivot on that day. And so you pretty much have your full position.
Right. And you're probably around 23.50 as your average cost. A little more around there.
Let's see how it plays out. So, it wiggles around for about a week, and if your cost basis, if you started buying it at the standard pivot, that would have been, not the most pleasant week in the world, not the end of the world, but, it's not the best time. But with that little lower cost basis, it makes it the ability to stomach that easier. And then here you can just hit the gas pedal. If you want to buy some more, you can buy a little more. Never get carried away, but, it's proving itself, and let's see what happens. Marcus. Well, we were talking about, we both, for those of you who haven't watched the Profit on CNBC, Marcus Lemonis, this is his company that he runs, and it's such a great show that we found out we both like.
Yeah.
My dad turned me onto it. He kept saying, have you watched the Profit yet? Finally did now.
I mean, honestly, because I looked at this and I traded this in the past, that was a huge positive when I saw him because I believed in him because I've seen how he helped out all those other companies.
Yeah, he's a very ethical man.
Okay, we talked about sneaking in early, 2 strategies to sneak in early. What about exiting early? A lot of us have a hard time selling stocks, and we get caught in the 7-8% range, and that can add up. So how do we get out early?
Well, you know what? This is something I've been using for, I kind of started this, what we're going to talk about, in the late 90s. And it really came about from reading Bill's book, and it was before I was working with him. And he says, okay, cut your loss maximum 7 or 8%, but your average loss should be 5 or 6%. Well, what? That doesn't make any sense. So your ultimate line in the sand is 7 or 8. But your average loss should be 5 or 6. And then later, when I talked to him, I was doing workshops with him, he told me, well, his average loss is really 3 or 4%. So you need some way of getting out before the 7 or 8. 7 or 8 is, that's that line in the sand. When it gets there, you just sell it. You were wrong. You can buy it back later if you want. So how do you get that edge? How do you start scaling out? And really with selling, what I found is it's not an all or nothing. Whenever I do an all or nothing type of trade, typically a mistake. So you want to gradually get out, and you're looking for warning signs. And this is a warning sign that I noticed years ago. And it's really, is a stock following your expectations or not? And it's the pivot day low. And so the criteria is, when a stock breaks out and it goes through a standard pivot, this isn't the alternative pivot, standard pivot, it should hold that low. Shouldn't really close below that. If it closes below that, many times that stock just needs some time, or it's going to break wide open and get ugly, or it just might set up and give you a later entry. So that's your first warning sign. The old saying on the street is your first loss is your best loss. There's a million sayings out there about taking your losses quickly. If you read any trading book, cut your losses fast. But you want to have a logical way of doing it. Use the chart as your guide. So we're using the low of the day that it breaks out. If it closes below that, we're going to start selling, maybe 10%, maybe 30%, maybe 50%. We're going to look at some examples. And volume isn't critical. Sometimes you'll have high volume, sometimes you won't, but this is playing defense.
So first case study, these are stocks that did not test the pivot day low and how they react. Our first one is Fizz.
Okay, so National Beverage Corporation, you can see it breaking out of this big cup, and very powerful breakout too. I think this was a breakaway gap at this point, and you can see it going in the blue area. And so immediately at this point, what you're doing is you're setting an alert, a price alert, at the pivot day low. And so typing in the low of that day was 61.55, you're right-clicking, send an alert, and a lot of times, just write a note. Hey, if it crosses that 61.55, you're going to get an email. You're going to get an alert saying, hey, Fizz is crossing the pivot day low.
Yeah, and this is only available in Marksmith, correct?
That's right.
Yeah, and now keep in mind with this, you want to wait for the close, but that's why it's critical to have these alerts so you can be prepared and say, okay, if it hits through that alert, I'm going to be in front of my PC or in front of my laptop or what have you before that close so I can see how it's acting and sell some if necessary. So let's see what happens with this one. Well, that's easy.
I know, yeah. I mean,
they're all like that. Let's move on.
Any questions?
Unfortunately, they're not all like this, but this is what you hope for. And notice that little flag up there. I can't even tell what number that is.
That's 31%. Yep.
So that came from a Bill comment. He said your best stocks are those ones that right out the gate, they go up 20% or more within 3 weeks. So we're trying to make the computer work for us. So we just took the pattern record and said, okay, if it goes through the pivot, goes up 20% or more in 3 weeks, we're going to just put a flag on there. We're going to put the number and say, hey, pay attention to me. This might be a big winner. Let's see what happens with this. It worked out with this one. So that was I didn't participate in this. I was asleep on the switch on this one. But look, it was a beautiful move, and those people who were waiting for that pullback, well, it didn't happen.
That never came. Applied Optoelectronics, AAOI, probably a lot of you on the call recognize this one. This is early January of 2017. So right at the beginning of the year, one of the first stocks that breaks out. Out of a double bottom, the pattern recognition picks it up here. This is actually a breakaway gap. And you're putting the low right at that, the low of that pivot day right there. And also, so not only do you have this really powerful breakout, you have the teardrop right there. You have the parachute. What this is signifying is this is the highest volume day since the first stage breakout at this point. So it's a massive, massive volume day. This is exactly what we're always looking for, Mike, right? You're looking for the most powerful breakouts, the ones that you're immediately up on, you're in the green, because a lot of times those are your best
This
winners.
is about as important as it gets, yeah. A huge move. Notice it's up over 30% on that day. So let's look at the next day. And I think we have a blow up of this. Now, this is really important to note. Up in the top right-hand corner, you can see it was down 5.5% on the day. That's why we're using the chart as our guide. Okay, the 7% from what you caught, if you paid, at the close of the prior day, if you're down 7%, you got to sell it. But let's assume that you're getting it as it was going through the pivot area. You're looking at this, you're looking at your screen going, it's down 5.5% on massive volume, but you want to put it in context. Where is it in relationship to the low of the pivot day? It's nowhere near that low. So you're saying, okay, this doesn't feel good. I gave it back a lot of my profits from yesterday. But you know what? It's acting normal. It's, went up 30%. Giving it back 5% is not a big deal.
Right.
5% never feels good, but in the context, it's absolutely normal. And if you can see the volume down there, the volume is less than the prior day, and that's key as well. So it's acting completely normal. So let's see what happens with this. Again, we see the little flag there. Has a nice move up.
And after that day that we highlighted, that 5% down day, it doesn't even come close to that. It
looks like nothing, right? Yeah.
Exactly.
And then it didn't end well. And, we know when you're playing with fire, eventually, you can have some situations like that where it doesn't end well, and that's earnings for you.
Yeah, but, $27 up to $120.
Not a bad situation.
Not a bad at all.
As good as it got this year, yeah.
What goes up must come down.
That's true.
All right, let's talk about some stocks that test their pivot day low. The first one is Weight Watchers.
All right, so Weight Watchers here, you can see a cup with handle breaking out. You have the RS line, that blue dot, also telling you that it's becoming more of a leader in the market. And look at that next day. Coming back in, slightly undercutting, and then closing.
Yeah, so that's normal action. When I first came up with this back in the late 90s, I would sell it when it breached the low until I realized, what, that was kind of a sucker trade. Mm-hmm. And if it does end up falling apart, you get your best prices. But really, it's how does how does it close there on that day? So, this is normal action. Bill would look at that and say it's not, there's nothing, no reason to take any action at all. Let's see what happened. Wow. That lifted, see the 41% within, the 3-week time frame, massive move. I mean, who would have seen that coming? What was that? There was that big news on that one, right? Was that
Oprah. I think Oprah was coming in and buying shares of it, or buying like 10% of the company or something.
She has a massive impact, and look, another market leader. I mean, that was a beautiful move. See what else we have.
Now, what about when they actually undercut that pivot day low? How do we react? Let's look at a couple stocks. First one's Toro.
So here's Toro, and you can see we labeled the pivot day, and we put the price alert right there, the line. And so this one, it actually closes below that line.
Yeah, so now your question is really assessing and saying, how bad is it? Is it bad enough to blow out your entire position? Well, let me tell you, the stock goes down a lot. But with the information we have at this point, no, it's not enough to do anything other than trim your position. You're backing off. This is going to be your first loss. It's going to be your best loss. But so you're going to just sell maybe a third of it, maybe a quarter of what you've bought so far. And you probably have only done one buy at this point. So you haven't bought that much, and you're starting to scale out, and you want to give it some room to see what happens. Well,
there you go. You're right.
Wow, I'm a genius. So, of course, at this point, you're not even down 7%. You can see that pink area, that's 5 to 8% from your pivot. But you look at that chart, and it just tells you, okay, that breakout completely failed. You don't have to wait for that 7 or 8%, and you sold some already. Makes this sale a little bit easier. Sell it, move on, don't look back.
Yeah, in the top right hand it says 6% from pivot, so it's calculating right there.
Yeah. We try to once we built the code for the pattern rec, we wanted to put on as many bells and whistles to make life easy for all of us and the users of MarketSmith. So then it got really ugly, and what happens is a lot of people early on in their trading, they don't like selling and taking that loss, but you know what? They can get really ugly like that.
Yeah, it's a lot harder to recover from this loss.
Yeah.
H&R Block, breaking out at the flat base, and so it's reversing and you're closing below.
Yeah, so this one is a little bit more dramatic, and you notice it closes below the pivot day plus the low of the prior day, so it's a little bit more widespread for this particular stock, and so you're going to sell a little. You don't have to exit your entire position, but you've only bought half your position anyways, as it went through the pivot. So now you're probably selling half of that. So you're sitting with a quarter position. It's not going to do that much damage to you. And, H&R Block, it's hard when you've got, Trump in there and he has this agenda that he wants to be able to just, put them out of business, right? So, but let's see what happens. And then you can see up in the top right-hand corner the comment that you'd mentioned before.
Right.
That got ugly. But you would have exited, you would have had a tiny position. Again, why would we average up and scale out? Yeah,
in the end, limiting these kind of portfolio-destroying losses can be the reason why you have a good year or bad, right?
Yeah, and psychologically, too, if you're keeping your losses small, it helps you, and it's all a psychological game.
Yep.
That's what we're doing.
All right, let's put it all together now. Let's look at a recent example of where we can use alternative entries and exits and see how it affects our portfolio. So we're going to walk through Electronic Arts, or EA.
Okay, so you can see Electronic Arts forming a cup with a handle here. And there's your prior resistance. We're drawing a trend line right there. We're sending an alert at it. And then it breaks through there, and so there's your initial buy through the alternative pivot. And then your standard pivot, you're completing your position. Now, since this is also when you're breaking out, that's your first day, you're setting your pivot point low here. Now you're undercutting and closing below, and so this is where you're going to lighten up a little bit. So this is where the flexibility comes in at this point, especially when the market might be a little bit more uncertain and things like that. That's what I like about this.
Yeah. So again, you don't have to blow out a large part of your position. You're just backing away from some of You're just being flexible, as Jonathan said. Be like a tree, bend like a tree in the wind, right? So we're selling some. We're on the defense until we're on the offense again. So let's see what happens. Well, this is a very important day. Even though we didn't get volume, this is what's called an upside reversal. You clean out some fresh lows, close the highs. It's a great way to look at a chart and say, okay, this stock should move higher from here. Otherwise, there's something wrong. So now our new low that we're really paying attention to is that low there. So it should move higher, and let's see if it does.
Now, at this point, if I got shaken out of some of those shares, considering if I like this company, I'm buying my shares back at this point because it's crossed the pivot again. It's trying to break out again. So I'm like, okay, let me just start to buy back some of those shares that I gave up as it undercut the pivot day low.
And that's certainly a way to approach it. I want to wait for a little bit more strength. I'm probably going to wait for another update, preferably one that goes over the high set about a week ago. But if it goes through there, and it did, now I'm going to buy those shares back. My cost basis is a little bit higher than yours, but that's why this is, we're being flexible, and this is an art. And Bill taught me that, if you're shaken out of a position and it gives you a proper entry point to get back in, buy that position back plus some. Be on the offense. So if I originally had 1,000 shares and I sold it down, when I get back, I'm going to buy 1,100 shares. Not 2,000, just a little bit more, 10% more. Put yourself in the driving position. Be on the offense. And now it moves up pretty nicely. It forms another flat base and gives you a little bit earlier entry point here, breaking through that 90 level, a little bit before that 91 level of the standard 91 standard breakout. And then there's your standard pivot. And once again, you're putting your pivot day low. And in this case, it didn't breach it, right? So this one, now you've scaled in. Now you haven't gotten a reason to lighten up at all, and it's quite a bit higher at this point. So this is, you're listening to the market. This is a good example of just listening to the market and the stock.
Here's a question from Kareem. On the sells, do you act before the close, after hours, or wait for the open after the signal?
Great question, Kareem. You want to go as close to the close as possible. Definitely not in the after hours, and you don't want to wait for the next day. So you're trying to get that edge. So what I would do is I would look at it in the last 15 minutes of the day, and that's when you're going to be making this particular decision.
All right, let's talk about how to put this in action. The theory is fantastic. We looked at a lot of examples from this year. How do I do this now? How do I use Marksman to find these early entries and early exits?
Well, generally, the place where I find my ideas, the first stop is the Grill 250 because it just does such a great job and over the years. Now, Mike, why don't you explain this, because I saw you sit next to me for a number of years analyzing and developing this product.
Yeah, Scott O'Neill had asked me, put together a one-stop shop list, and so I said, okay, no problem, and it was a problem. It was a little bit more involved than I thought. So fast forward 2 years, and it was about 30 different screens, and we have a screen for IPOs, we have a screen for top return on equity, just top performing. We got all sorts of screens. We boiled it down into the pond you want to fish in. I use this almost exclusively. Probably 95% of my trades are from this list. Occasionally there'll be something off the list, but this is the pond that I want to fish in. Do not think every one of these stocks is going to work out. This is the pond you fish in. You go in and, instead of looking at 5,000 stocks, you're looking at 250 stocks. And so it makes life a lot easier. And these are the canceling names that are going to be, in position or, really leading the market.
Now, for those of you who don't have as much time to go through 250 stocks, now I do go through all 250 stocks on the weekend, but these smaller reports, they're huge time savers. So what we're doing here, we're taking pattern recognition and just having it go through the Growth 250 list and putting these smaller buckets. The actionable list here, breaking out today, you can get alerts on it when stocks within the Growth 250 are breaking out on that day. Recent breakouts, you can take a look at over the last 15 days how they're doing. Now, the near pivot, this is the one we've highlighted today because this is the list we go to use these alternative entry strategies right here. right, to draw the trend lines, to get the alerts. And guess what? There are 28 stocks on this list right now. So we're going through those and seeing if they're prior resistance or
it's a sign of how healthy the market is.
Exactly, yeah. Now, of course, tight areas and power from pivot too. So these are great lists, but the near pivot is the one that we're really focusing on.
And these are just some of the reports available in Marksman.
Yeah.
These are all pre-screened based on Mike's already 250 strong stocks, and now we're narrowing down further by different categories. So as Arusha said, we're going to focus on the near pivot because that's where we're going to find all alternative entries. We've got 4 stocks that are on this list now that we're going to talk about. The first one being Grand Canyon.
So here's Grand Canyon. It went from $40 up to $80. And so you can see pattern recognition picked up a cup at that $40 level out of the breakaway gap. Then it formed a flat base, and now it's currently also forming a flat base. Here is your prior resistance. And so you can see it actually emerged from it yesterday. You can see that alternative pivot at that point. But, you draw your trend line alert, you set it. We got the alert yesterday as it came through here.
Yeah. So with this, I haven't done the fundamental work on this one, but if this alternative pivot is going to end up working out, it should pretty much go up tomorrow, and that's what you use in the chart. The chart gives you an expectation. It should move higher tomorrow. If it doesn't, then you still watch the stock, but it broke above that yesterday, as you said. So
now, Joe said, "Are you worried this is a late stage base?"
Okay. Fair question. So this is a third stage base.
Now, how do you know it's a third stage base?
Well, if you see on the in the little box there, it says 3B, and it's the 5th base that it's had. But 3B means B is just a base on base. So we go A, B, C, D, E, and so on. So it's a third stage base, and no, I'm not concerned about that. If I could have everything I want, I would have done the first stage base early on in the move, the little cut down there. But no, in the context of this move, that part does not bother me. It's always the context of looking at it and how carried away did the stock get. If it had a huge move and then had a third stage base, that's different. But the fact that it built a base on a base, that seems to be the character of the stock. That doesn't bother me.
That's Grand Canyon. The second one is the Toll Brothers, TOL.
Toll Brothers, you can see in a resistance area, the alternative pivot around $40. The pivot is 41.07, so that's your standard pivot. So this is setting up right now in the near pivot list.
Yeah, this has been a strong group. You've got the NVRs out there that are have done well, and this group looks like it's going to go, and then it doesn't go. It looks like it's going to go, but here's your point. It's going through that resistance area, so it should move higher from here. And so if you're going to be trading, if you do all the fundamental work on it and you want to get into it, if you're going to get into it at 41.07, it looks like now's when you would want to be getting into it. So if you're making the decision to buy, and we're not making recommendations today, we're just saying if you're going to buy it, you're going to buy it here to get a lower cost basis.
The next one is Monolithic Power, MPWR. And this one has a different one. This has a downtrend line.
Yep, so it's forming a cup right now, and you can kind of see this downtrend line forming over the last week and a half. Maybe it's putting a handle here. We'll have to wait to see what pattern recognition says. But that's what we're seeing right now for the shorter-term resistance.
Yeah, so probably by tomorrow it'll have enough days in there for the handle to be drawn. But that is your downtrend on there. And you can look at the character of the stock. It tends to hug that 50-day, which is your red line on there, and just builds base after base. So you would expect the character of the stock, to move higher, but probably not substantially right away, unless the character is changing. But it's certainly been a nice steady trader throughout the year.
And finally, the F in the FANG stocks, Facebook.
So yeah, Facebook forming a flat base, and then you can see the normal pivot is 175.49, and this is forming a little bit lower than that, probably around 173.5 at this point. Now, full disclosure, I do own a position in Facebook, but it's setting up, again, it's gone on a pretty nice run. It's done quite well this whole year, but there's your kind of earlier entry point, your alternative pivot potentially setting up here. We'll have to wait and see.
It's actually the high of that pink day. It's 174, so it's $1.49 lower than the standard. So if this is going to work, it would give you an advantage in jumping early, but it has yet to cross that.
Yeah, so that's your edge. If you're trading Facebook and you're wanting to add to it, let's say you already have a position, you're wanting to add to it, you'd be going over that 174, you'd be adding some as it goes through, your standard pivot, you're adding to it. If you want to initiate a position and you've done the fundamental work and you've decided this is a stock that makes sense for your portfolio, then you're buying it through that 174. Now, if you look, I think we printed this chart probably about an hour before the close, and I think it moved a little bit higher. So typically with downtrends, we look at them within handles, but on this one, it looks like it was just piercing a little downtrend that we don't have drawn on there. And so really at the close, you could have been initiating some of a position, expecting it to go through 174 where you're buying some more, and through the highs where you're adding some more. I don't have a position currently in this, but if I were trading it, that's how I'd handle this position.
So for those who are not currently market subscribers and have missed out on all of this unbelievable research of this powerful platform, we have an offer for you. If you want to take a 4-week trial, it's just $29.95, and that gives you access to the Growth 50 stock list Mike talked about, which we screened the 4 ideas from. It's going to give you the pattern recognition on every stock in the database. You're going to get stock charts with all the fundamental and technical data, pre-screen reports, screening tools, and probably most importantly, access to the product coaches. Now, Arush, you're a product coach. Tell us benefits.
Well, it's nice to get through that learning curve a lot quicker, and so you can always set up times with us by just right on the website. And we're going to give you a phone call, show you our screen, show you how to use MarketSmith nice and easy. Really show you how we use MarketSmith. And that's what it comes down to. We're using MarketSmith day and night here. And so we'll show you how to set alerts, how to understand these early buy and sell points, how we use pattern recognition, and of course the Growth 250, how we incorporate that into our routine. So all of us at MarketSmith, we all trade. And we've been trading for years, and so we have that experience that we've been sharing. And actually, a lot of us have been coaching for years and years, too. So
you have a great team. I mean, Arusha runs the coaching team and really all of MarketSmith, and you've got a fabulous team, really knowledgeable, a lot of depth there.
So if you want to take advantage of the offer, it's www.investors.com/ms4weeks, or give us a call, 800-452-4422. to take advantage of the special offer, $29 for a 4-week trial. Let's see if you have any good questions. A lot of people are saying, good show, I'm already a subscriber.
Thanks for your subscriptions.
Thank you.
How do I identify stocks which are early? There's thousands of stocks out there. How do I identify which stocks might have an early buy? This came from Jag Suri.
Well, I think we pretty much, handled that. If you're looking for an early buy, I would start with the Growth 250. That's going to be your easiest way of doing it. If you want to do it the hard way, that's fine too. You can build screens, and I'm a screen junkie, and you can call the coaches, and they can walk you through. And I think they have some of my old screens. I'm sure they would share them with you guys. And screening is something fun, and everyone should learn to do it. But if you don't want to dedicate the time to it, just use the Growth 250, layer the pattern rec on there, and go through the stocks that are in the near pivot. It's only, what did you say, 20?
There's 28 now. Yeah. Honestly, I have probably over 100 screens or whatever in MarketSmith. But once Mike developed the Growth 250, I don't run any of those screens because I learned that Mike's screens always find the stocks earlier than my screens ever did. So I use the Growth 250. I use that near pivot.
Chuck wants to know, if you're already a MarketSmith subscriber, how do I add on the Growth 250 and pattern recognition? Charles, give us a call. We can give you a heck of a deal because you really are only using half the tool. The power of the platform is that pattern recognition and the Growth 250 that Mike worked on. It's really going to complete your tool, so give us a call.
I'm a little biased, but I wouldn't use it without it.
That's true.
There are literally 20 questions saying, I came in a little bit late. Will this be archived? Absolutely. This will be archived. Give us about 24 hours. It'll be up on investors.com. And I recommend you watch it more than once. I had the benefit of helping build it, and I've seen it 100 times, and I will definitely go back and watch it again because there's really very valuable information here on sneaking in early, and I think more importantly, how to sneak out early, to not have bad losses and keep your capital.
Let me make a suggestion. As you go through it, what I would do, and this is how I always did things working with Bill, is I would then pull it up. So pull it up in MarketSmith, and there's a change date feature there. And then just go ahead and do that change date and look at it, study it, and always ask yourself, how would you handle it? So I'm showing you how I would handle it. You might have a little bit of a twist on it, and if so, that's fine. Just test it out.
We have a question here with MarketSmith about the basis and limiting it by like a first stage base, stuff like that. Within the near pivot, within the recent breakouts of those lists, we actually have a column header that will tell you what stage base it's in. So they're exclusive to those lists, okay? You can sort it by that. So if you just want to see the first stage bases, you can sort it by the stage count and then just look at the first 5, which are probably first stage bases.
James asks, Mike, do you use pattern recognition?
Well, I wouldn't have spent all those if I did. Yeah, you know what? What I wanted to do is use it to speed up my life. And so we added all those bells and whistles on it. And so rather than doing the calcs that I would do before, is how deep is the handle, how deep is the base, what stage it is, like we had that one question, I can quickly look at it. So it saves me so much time, and I use it all day long.
Yeah, I don't think ever anyone realizes how many hours Mike spent on both of these products. He gave a lot to develop these things.
Well, that part of the question is Mike is using a product that you can get for $29.95 to manage in-house money for Bill O'Neill. So that tells you how powerful the platform really is. So
yep.
With that, we appreciate your time. We are 2 minutes over, so this will be archived. Thank you for your time. Thank you, Mike, and thank you, Marusha, for building this. It was very educational. And have a good afternoon. Happy investing.